Hey, hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show, where we look at the technical charts and try to understand what happened in the market during the previous week and then also plan for a better trading week. That's starting from tomorrow, August 26th, Monday 2024. So let's get into the charts. First, we'll come back to this slide to summarize. So this is the weekly charts of the Nifty that you're seeing there. Yeah, that's an ascending wedge. It had a small dip and then it's heading once again close to the top of that wedge. And we have the daily charts of the Nifty on the right side, where we also see a ascending wedge there, and price seem to be moving up after having hit the bottom of this ascending wedge. Steady up move is what you see there on the charts. Weekly charts of the Banknifty showing a little more narrow ascending wedge, and seems to have taken a support at the moving average and then once again heading towards the top of the ascending wedge. On the daily charts of the Banknifty on the right side, the banking index shows that it also seems to have paused the down move in the panel channel on the short term for some period of time and then once again climbed above the 20 moving average and then moving up. So overall, you see that market is at the very top, but we also see that the market had some corrections, very small corrections, and then even while being at the very top, market has no intentions to move down and heading once again to break out is what the chart is showing as of now, based on what happened in the last week. So we would try to look at the candlesticks and pattern. Before that, summary says that it's the third week of recovery seen in the Nifty index with 284 points up, 1.16% up. It's a decent up move, about 24,800, very close to the all-time highs. So the week had made new highs on every single day. If you will see that when you see the daily charts, every single day we had a new highs that were made on Nifty, except for the last day of the Friday, and it was steadily moving up, and it managed to climb and conquer the 20 exponential moving average once again. It also closed a gap in between, one of the gaps at near to some 24,850 something. Yeah. Banknifty also managed to close now the 20 exponential moving average, moved and closed below that earlier. So it did not make a 1%, but slightly lesser move, 400 points, 418 points to be precise, moved up, and it had a resistance gap which it cleared clearly. So that's the story. We will get a little more better picture when you see the candlestick charts and patterns. So the Nifty weekly charts are showing the candlestick is bullish, almost like a wide range bullish candle weekly with a gap up start. So that's pretty bullish, and it seems that this change priority bounce of has worked nearly, and the recovery is almost getting full, if most little more towards the all-time highs. And Banknifty daily charts are showing that it was on weekly charts of the Banknifty, I'm sorry. So weekly the Banknifty also showing a bullish candle, not exactly a hammer, but almost like a hammer. Right, so that's also kind of bullish. And the change in polarities from the support zones seems to have worked well on the weekly. So bullish candlesticks, both indices. And daily, the close was kind of small body and decisive, hammer kind of Nifty, and a bearish candle on the Banknifty. So if you look at the daily charts of Nifty and the Banknifty, you can see that it was making steadily, it was making new highs every day except for the Friday. Banknifty was very volatile, but still it made new high almost all the days, and then eventually closed near to 1% up, both of the indices. That's what happened. This is the last 5 days of price action that you see on the daily. Bullish bands are showing slight beginning of an expansion in Banknifty, while contraction is intact. But the major difference is that it's having a bullish bias now that the price is above the median of the Bollinger Bands on the short term. So bullish bias contraction is what is happening with a slight beginning of an expansion on the upside on the case of Nifty. So that when Nifty is more bullish. So bullish bias expansion of the Bollinger Bands indicate that it can again move further out of the Nifty. Right, probably the Banknifty also because it's bullish bias and expansion can happen on the upside. So just to summarize, the bullish weekly candles on both indices with some resistance on Friday. Red hammer and the spinning top candles, we've seen that on Friday. Daily candles. So low and high, low pattern is still intact unless it breaks the all-time highs and unless it breaks above this. So this is the lower high, lower low. It will get breached once it moves towards the 52,000 and closes above it. So that's where it breaks. So that's something to keep in mind. And the positive side, it has made a decent recovery and closed above the 20 expression moving average, both indices. But it has got a stiff resistance of an all-time high, a gap, and all that right above. On both indices, it has that. Although contraction sideways is what is happening, but with the bullish bias indicating that it's a more potential of that turning to an upside expansion. So that's about the candlesticks and the summary of what exactly happened last week. Right. Let's try to understand where exactly the momentum and the trend indicators on this, multiple time frames of this indices stands. So momentum has picked up definitely, but very slightly only in Banknifty. But in Nifty, it has definitely picked up beautifully. Nifty is back to the bullish momentum above the RSI 60 on both time frames, daily and the weekly. But Banknifty on the short term has not gained that much. So short term bullish momentum on the Nifty, but Banknifty still remaining the sideways. So momentum has gained, but it is yet to pick up much on the Banknifty. So momentum is bullish on Banknifty, bullish on Nifty. That's for sure. We can see that it's bullish rising momentum. Right. So momentum is absolutely bullish in the case of Nifty, but again the Banknifty, it remains to be sideways. On the weekly also, it remains to be sideways. Why? Weekly, I just need to check once again. So weekly, the momentum, if you see, it is still not climbed above the 60 RSI. That's why it remains sideways. So Banknifty is remaining the sideways with respect to momentum. Nifty is absolutely on both time frames bullish. So when it comes to the ADX, it's a trend indicator. The bullish momentum is maintained in the Banknifty, but that bullishness is falling in the strength. It's not having enough strength in the case of Nifty. But Banknifty, short-term momentum has picked up with the flat strength, but medium term or the weekly momentum trend has not picked up. The bearish is increasing also. Banknifty, the trend is in trouble. Momentum has picked up slightly. Basically, Nifty has gained and showing bullish momentum. Banknifty is set to show that. Now moving on to volatility. India VIX is the fear on the greed index. Volatility index has cool of 6%. That's at 13.55. So it's fallen back to the low volatility regime. Right. Remember, it had big spikes in the election times and then post-election, the budget times and all that. It had huge volatility. That's the dips and the ups and that we are seeing here. Now that the events are cooled off and it's waiting for the next event before it spikes. So some cool off has happened after the Fed events, and Japanese crisis and all this. Things have cooled off a little bit. Is what the volatility index is showing. Right, a 6% drop this week. Moving on, if you try to understand the open interest, that contradiction between the Nifty and the Banknifty is reflecting here as well, where we have a long build up on the futures high and a long unwinding, which is bearish in nature in the case of Banknifty. So the next week it's the monthly expiry, so now it's 29 on Banknifty and 20 off. That's a mistake. It's August 28th on the Banknifty and at 29 on the Nifty. So the options also is reflecting that. The options is having a PCR, which is bearish in the case of Banknifty, but it's bullish in the case of Nifty. So both the futures and options, opponent list is showing the contradiction of bullishness in more evident in the Nifty and less evident in the Banknifty. Let's try to see and find out the levels with the help of the charts as well as the opponent list. Let's see the opponent list first. The opponent list is showing that it's a 500 point range of 24,000 where the highest put writing is there and 25,000 where the highest call writing is seen. Second level of support and resistance is at 24,800, very close by, and that's the same place where the second highest resistance or the call writing is seen there. So Banknifty is 51,000, and that's where the highest put and call writing both are there. So very tight range. Anything could happen. Charts are showing the same. It's at resistance. So second highest put and call writing and support and resistance is seen at 50,000 and 52,000 respectively for the Banknifty. So that's what the opponent list is showing. But now about the support resistance level from the charts, we see that 25,000 close by is having a very big resistance because that's the previous all-time high. There is a gap there and all that. After that, you have the all-time highs at 25.79. After the resistance is the uncharted territory. Market can move up anywhere. All the different ways of analyzing the levels would be to put the Fibonacci extension levels and then go for the different percentages. So we'll do that next week. I don't think this week it's going to break out from that. There will be some resistance that will cool off things. But if the market closes above this all-time high, then we'll have to look back at that. So right now the resistance seen is at 25,000 is where the major resistance is there. That's what the Hawaii is also showing. This could change on Monday. But this is what it looks like as of now. Now supports downside would be at 24,500, which is the previous resistance zone, and then 24,170 nearby that. Also there is some kind of a previous resistance zone can act as support. Then 24,000 is a big rounding number, that's the support. Banknifty, the resistances above would be 51,150, where some kind of resistance was felt on Friday as well. And if that resistance is taken out clearly, it could head to 52,000, where a major next resistance will come in. Once that 52,000 is taken out, all the gaps and everything is clear, it could be heading further towards the all-time highs. You have a previous resistance that can appear at 52,830, right? So suppose downside will be 5,700, and then 50,000 is going to be a major support, and then if that 50,000 breaks, there can be 1,000 points fall to the 49,000 big rounding number resistance downside. So we just have to correlate these levels from the opponent list and the support resistances from the charts. Then derive at places where you place your bets on the upside and the downside, right? Where you see the probabilities. This is the probability strategy primarily, right? This is how the charts looks like. Once again, see major resistance is seen there, but you have a gap up above that, then it's uncharted territory. Market could go as high as 25,500, which is top of the trend line channel. So that's an uncharted territory. 25,500 is what we should look at ideally. If there is a close above this that happens, or if market breaks out on Monday to some super bullish thing and then takes out the gap and the all-time high both at the same time, then that's where it could be heading. But downside, the 24,500 is also a previous resistance zone as well as the 20 expansion moving average support, and falling from there could take it to 50 expansion moving average at 24,169, and then fall from that will be back to the 24,000 big rounding number, right? So that's for Nifty. Banknifty also, we see the lower low, lower high pattern. If that is breached, it could head high to 52,000. That's what confirms that the lower high is cleared. So that will be major resistance zone, and then once it takes off from there, this is the next one where the resistance can be seen. It's a previous resistance on below the 53,000. That's at 52,800 nearby. Right. So have to keep a close watch on those. Similarly, supports at 100 exponential moving average at 50,000 major support, and after that it can fall as low as 49,000. 1,000 point fall could happen if it cannot sustain the 100 exponential moving average. Right. So that's support resistances that we talk about. Let's try to see how the sectoral indices were performing. So it has had a flattish move of less than 0.5%, nearly 0.5% up move, and showing a gravestone doji. Right, showing a gravestone doji at resistance. Gravestone dojis are indications of some pullback, so you have to be cautious slightly, but otherwise you could take long positions because momentum is bullish in both time frames of daily and the weekly. And although bullishness is slightly falling in nature, and the candlestick is having interest, so you be cautious with tight stop loss. You can take long positions. Metal. So overall, if you see, except the reality sector, all of the sectors are moved up last week. The sectors that are still remaining bullish is IT, auto. Oh, auto is not bullish. Right, it's sideways in the short term. So IT and pharma and FMCG. So it's three sectors. All three are defensive, very defensive stocks. Right. So those are those defensive stock sectors that that is holding the market. While this week we had all of these sectors except for the reality that moved up. Right, 0.5% of the IT, which is kind of flattish but definitely close. Higher metal 3.3%, auto 1% up, pharma 2% up, and nearly 2% of FMCG up. But reality was 3% down for some reason. So, short of those sectors which are not IT, not pharma, and IT, pharma, and FMCG, all the sectors stay out of that. Right. So we have the charts also here. Charts are showing that there is resistance. Candlestick is showing danger, but momentum is taking a support, and it's a range shift, and it's definitely bullish. It may pause and consolidate some period, and then once again it will move up. Is what we can anticipate, unless the momentum once again falls back inside. The momentum is still bullish and having a beautiful range shift. Momentum range shift strategy can be applied here. So definitely bullish, but candlestick, be careful, have tight stop loss. Here there is a pullback that has happened on the metal. It is still struggling to climb back into bull zones on the weekly. Auto consolidating at the very top. Momentum is still bullish. Pharma breaking out bullish, extreme bullish. FMCG once again at the top, breaking out bullish on trend, momentum, everything. Reality pulling back, correcting, consolidating, it's trying to hold its levels above the arrow side, momentum 60 above. So let's see some substance of the sectoral analysis. Different stocks are doing good, while others are struggling. Some consolidation happenings in FMCG and index and all that, which is at the peak. So that's a summary. So what the approach towards investing or trading should be playing those sectors which are bullish if you're going long. If you're simply playing the long game and not non-directional. If you're simply playing the long game, stay bullish on those stocks which are following those sectors which are bullish on both time frames with respect to the momentum at least. Then consider the other parameters of support, resistances, candlestick patterns, open interest, and all these things later on. But the primary thing is momentum. That's what momentum investing or trading is all about. So that's why we talk about the sectoral analysis. Moving ahead, if we try to analyze the strongest heavyweight stocks that contribute maximum to index, we can see that HSBC Bank is struggling and then slipping the sideways once again. While Reliance is trying to move again, it was beaten last week and then remains there in the sideways. So ICICI is the bank is the stock in the heavyweight that's holding up the market. It's remaining there with the bullish momentum on the weekly. IT is strong, super strong, and TCS both having momentum bullish and trend bullish, and it's in breakout mode. Kodak is sideways, Kodak Bank is sideways as usual, FMCG defensive sector bullish momentum. So ITC and ICICI Bank are the two stocks that's holding, along with the IT stocks of Nifty and the this thing TCS. But the banks are doing bad. So is Reliance. So mixed bag there, but yeah. Looking at the broader markets, the mid cap and small cap is once again at all-time highs. Right? It's good that broader markets moves along with the indices, but you'll be cautious because it's heated up. Non-major corrections have come in at. Institutional participation is selling as usual, but lesser quantity than last week. 1,600 crores of selling, but crazy buying for the domestic institution. 13,000 crores of buying, and net longs and derivatives of FID is also moved up. So it's bullishness that you see for the FIs, indeed. Futures, options, everything. FIs and the retailers both are bullish overall. That could be the Friday moves anticipating the Fed rate cut news from the Fed outcome, Fed speech outcome. Right? Could be that, but in a nutshell, FI institutions had done some amount of buying last week, but overall they were sellers. And when is it that the foreign institutions are coming in as buyers? That's the time when the market will break out. That's a time when DIs will be making some money by bottom booking. But as of now, the mutual fund money is holding the market is very evident. And any good news on the foreign institution side would be taking the market to very, very high levels. But the proposition of the domestic institutions investments in our market is increasing, is almost equal as of now, as compared to a few years back where FIs were deciding what would happen. But now that's not the case. It's the DIs who decide what's happened in the market, right? So yeah, keep a close watch on what the FIs are planning to do next week. Going ahead, if you try to understand the global markets, the global currencies, the commodities. Beginning with the currencies, dollar is cracked down. It's nearly 2%, 1.7% down last week. It's 6.2% from the top correction. So it's fallen to the bearish momentum, and so dollar is falling down. Dollar is cracking down, although that's not reflecting too much on the week in the rupee. Rupee has also lost slightly, 83.79, but still at the weak levels. And the momentum is side. So rupee is not directly correlated with the dollar, but rupee has gained a little bit last week when the dollar crashed. Crude oil is also falling down, and it's at the trend line and it's bounced up slightly. You see a hammer there. Momentum is sideways, so it's okay. Gold could be breaking out at very close to the all-time highs, but a flattish move, up move, but it's not ready to come down. It's a 27% move from the bottom that has happened, very close to all-time high. Obviously, when the dollar is cracking down, gold will move up. But gold is moving up along with the market at the peak is something to be cautious about, because why is people putting money in the gold? Is it as a safer haven than the equity? Then there's likely would indicate that the money would get pulled out from the equity market. So you're cautious on that way. But otherwise, the hedging instrument like gold, if you have diversified portfolios, it will save you from all that. That way it's positive. US markets, Dow Jones, Nasdaq and S&P 500 is what we look at. They all recovered beautifully after having slipped. And they could be breaking out coming days, probably anticipating the Fed rate cuts that could happen in the next month. So it could be bullish days from the US markets, what looks like. So US markets are close green with 1% up, and momentum is in the bullish rising stage. So global markets are good, especially the US market is doing good, so it's positive. Crude oil is cooled off, that's also good. Gold is breaking out while dollar is cracking down. Is something that you have to be watched with cautious eyes. Right, that's about global markets and all those things. So yeah, overall nothing alarming. Everything's on the positive side as of now. Let's move on and try to understand some action numbers for the next week. Two stock picks for next week. This is not a recommendation, it's for an educational purpose. You may get into these trades if you like. If you like, in the sense, if you do your due diligence and you get convinced by your analysis, then you can enter. This is my analysis. I'm just putting in here. So Hindustan Lever had done a decent bit of correction, and now it seems like it's heading towards a breakout of the cup pattern. If that happens, it could it's a lot of space on the upside towards the channel top, so that could be very rewarding if that happens. But the only trouble is the volumes are not at moved above this moving average. Only moving averages above move has not happened. Only is slightly less, but keep cautious. And the entry is not right away on Monday. The entry is if there is a price break above a new all-time high happens. Only then you make the entry. Right. Risk reward of 1 is 2 is possible. Probably it can be positional play also if you trail the stop losses. Reason is not just price pattern. Momentum is extremely bullish and trend is also extremely bullish. And it's an FMCG. FMCG sector is breaking out. It's a defensive sector. On the right side, you have another defensive sector stock that's about it's a pharmaceutical company. It's also having a potential breakout routing pattern. With the 1 is to 1.5 risk reward. Reason is bullishness in trend and volumes and momentum. All three. With price pattern potential breakout. But entry is only if the new all-time high is made. Right. Yep. So 2 stock picks for the next week. We have a FLO strategy also for next week. This is a Batman strategy where we are selling our teams and inside hedge and outside hedges half the quantity of the selling quantity. Reasonable risk reward if you're getting ahead of the 1 day ahead of the expiry. Position size you had increase. Very low margin requirements. And the range is also pretty decent as per the OI and the support resistance analysis that we done earlier. So right. Use your position size as per your capital and risk appetite. Right. So that's it from the weekly strategy. Remember, monthly expense can be very volatile. So this gives a breathing space as long as the market does not make big crash downs or big breakouts. And exit with modesty, accepting happy losses, very small happy losses that we know we are still in the market. We can play it again. Still in the market, but if you exit, adjusting at this point when the market is very volatile can be dangerous, but you can do that also if you have fast finger person. Then you can do the adjustment by shifting to either of the sides depending on where the market breaks out of this range. So break-even points are these points, right? 24,450 that range and 25,250 that range. So if that breaks from here, then your losses starts mounting. It's completely risk defined. That's a FLO strategy for next week. So let's just wrap up now that we have done enough analysis and we have some strategies also. So basically, the third week, it was the third week of green moving higher up. A recovery from a 5 to 7% of correction. Very small, you cannot even call that a correction, but it is a very quick recovery. Third week of recovery, and then momentum and the trend has gained, but banking index still has not gained and slightly lagging behind, quite far from the all-time high. But Nifty, on the other hand, is extremely bullish and it's very close to all-time high. Both of them have resistance up there just because of the fact that the all-time high. And but last week, both of them did well and then closed above the 20 exponential moving average. Although Banknifty was lagging behind, it managed to close above the 20 exponential moving average with a slightly less than 1% of up move. So the fact is, the lower high, lower low pattern is still not breached. So that's a thing that we have to be cautious about. Yeah, so that's the thing. So overall, market has made some 10 to 11% of correction. That's all. During its breakout rally of nearly 50% on the Nifty. That's the kind of rally that has happened from the March of 2023. Just 1 year, 50% of up move from the swing lows that we're talking about. So let's try to bucket the different factors that favor on the bulls and the bears. For the bulls, several factors. Yeah, broader market result very close to the all-time highs. Futures OI is longish, and futures options OI PCR is also bullish in the case of Nifty. US market has bounced when remaining at the very top at the all-time highs. Green close above the 20 exponential moving average in both indices. Momentum of the trend is bullish in the case of Nifty. Strong DI flow of money. Heavyweight stocks are either bullish or sideways, and of them fall into the bearish zones. If you consider just the top 5 heavyweight stocks, industry sectors are all, except for the reality, so bullishness or either slight sideways. And bullish bias contraction is what you see. Bullish bias contraction is what you see in the Bollinger Bands from the short term. If you factors in favor of the bears, it says that the lower high low pattern is very much intact. It's not taken out, especially on the Banknifty. You have a sideways momentum and bearish trend on the Banknifty. Gap resistance are there right above Nifty, and we have an all-time high levels. A big bull fight can happen. Bearish PCR, bearish futures OI in the case of Banknifty, and all that is there. Ascending wedge is there. We had seen the very first slide of the charts. FI as a net sell is still, right? It's one of the factors. So you have to exercise caution and refrain from taking long versions at this point. And even if you are taking, take it with tight stop losses, because a good correction has not come in. It's always a 5% correction that's happening. And despite the fact that market has moved up big time, right? It needs some at least 10% of correction before it can have a healthy up move. So technically, it starts to heat it up at the very top. Anything could happen. Corrections could come in any time. So I'll be cautious at the same, and you will also read and understand between the lines that the Fed speech outcome is boost to the market. For the rate cut, market could break out some more, and then suddenly you may see some bad news that could come in because of the war or the pandemic or rates or anything, and then we can do that correction. So the correction which is due, at least 10 to 15% of kind of correction is due, and if that does not come in, market is not healthy. And when it comes without healthy correction, it can be big corrections which will take out all the gains at a time. So you have to be cautious about that fact if you are a positional player. But if you are an intraday trader, you just have to look at the levels and the probabilities and put tight stops and get out if it happens. So Fed speech outcome, as I said, could boost the market move above the 25k easily. But after that, what does that cut? No. So you have to keep a close watch. No, when everyone is euphoric, that's when it happens. So as long as this 24,000 and 50,000 on the Nifty and the Bank indices are maintained, this thing should be fine. For the next week, the levels that I look forward is 24,000 and 25,200 on the Nifty. And the Banknifty, 49,000 and 52,000. These were the lower side and upside levels that I look for the Banknifty. Right, so always hedge your portions, hedge your portfolio. There are different ways of hedging that. Check out the playlist for strategies on that. And also, you can use the option strategies to make some money when the market is breaking out, but you anticipate some corrections. You can have rental incomes by using covered calls and cash secured puts and all that. Check out the playlist for all those things. That's all I have. Markets are heated up, but definitely bullishness is what is indicative. But Banknifty also has to catch up for that to happen. For the positional play, be cautious. Right? From the investment point of view, you just have, regardless of how the market performs, you just have to do your SIPs. Right? Bulk lump sum investments longish. May not be advisable at this stage. I'm repeating probably the things that I already said, but let me just stop it here. In case you like the content and like to see it further, subscribe to the channel and then share to your friends and put in your likes and comments and feedbacks and all that. I'm also present in other channels down here in the X, primarily in the X. I'm putting posts every day on technical charts, analysis and all that. So subscribe to that also if you would like to. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.